So a Trumpian Fed is on the way, and that's subject to the riff. Quite apart from the Fed's rather dovish interest rate cuts, they're signaling 2 more quarter-point drops after today's move, as Jerry said. One of the things that really struck me about the announcement is how much the central bank apparently opposes Donald Trump's pro-growth economic policies. Now, Trump's supply-side tax cuts and deregulation moves are going to boost the economic growth rate while keeping prices low. Already, second quarter GDP has come in at 3.3%. And the Atlanta Fed GDP now is projecting another 3.3% in the third quarter. Now, there's a business and factory capital spending boom going on, and real take-home pay is rising. But the J. Powell Fed expects the economy to grow by only 1.6% this year, 1.8% next year, and 1.9% the year after. Now, they did raise their projections slightly, I think 0.2 of a point. Basically, they're saying we at the Fed don't believe Trump policies. The Fed numbers, they go from 3% down to 2% over the next 3 years. Okay, that's all right. But the gap between Mr. Trump's economy, which he expects to grow by 3 to 4%, and the Fed view of less than 2% is troublesome and suggests that the central bank opposes the president's policies. This is not good. It's one of the many reasons why Jay Powell should have resigned months ago, and why Mr. Trump, by the way, has the authority to fire Biden Fed appointee Lisa Cook for her alleged mortgage fraud. If Jay Powell had a backbone, he would have suspended Ms. Cook during the investigation. And it's important that Trump economist Steve Myron has taken a leave of absence from the administration to fill a vacant slot at the Fed for at least 4 months. Myron, in my judgment, is a big winner today for his dissent. Mr. Trump has every right to appoint people to important agencies like the Fed in furtherance of his own policies. Of course, Myron promptly dissented from today's FOMC decision, and he said they should have cut 50 basis points instead of 25. Hat tip to New York Sun editor Seth Lipsky for suggesting, actually, the White House is risking its independence by sending Myron to a Fed that opposes free market tax cuts and deregulation. That's right. Meanwhile, the mismanagement of the Fed is beyond the pale. In recent years, they've lost nearly $200 billion from a mismatch of their assets and liabilities. The money managers at the Fed in New York are losing money on a daily basis. They're paying banks, or have been paying banks, 4.5%, but their portfolio is generating only about 2.5%. Meanwhile, the Fed's bond portfolio is completely underwater. Some have estimated losses of $250 billion. It's like a crashing savings and loan in the 1980s, or certainly the failing Silicon Valley Bank a couple of years ago. So, folks should cheer that interest rates appear to be headed lower. And they should also cheer that in a few months, Mr. Trump will appoint his own Fed to achieve his splendid economic growth policies. And that is the riff.